You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 7th day of March, 2024. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. This is our second live broadcast of the trading day. We do two every trading day. Now, the first broadcast, that's our live training room. That's private. Members only and those who are taking our 1-week free trial. If you have not taken our 1-week free trial, just go to mytradingiq.com. At the top of the page, there's a link. It says 5-day free trial. No credit card required. Click the link. Complete the 30-second registration. This one's a little longer than 30 seconds. Complete the registration form. Make sure you fill it out properly. Otherwise, we won't get it because it's an automated process. So take a moment. Fill it out properly, hit submit, and in most cases, same day, we will be in touch, get your desktop set up, get your indicators indicating, and then your trial will start the following morning. Now, you might be thinking, well, today's Thursday, I better wait till next week. No need to do that at all. Doesn't matter what day of the week or weekend or hour of the day you sign up for the trial, you'll get 5 consecutive trading days, even if it stretches over a weekend. So in other words, if you get signed up today, we get your indicators indicating, then you're good to go tomorrow. The weekend doesn't count against you, and then you get 4 days next week. Now, when you're on the trial, it's not just the live training room that you have access to. You have access to everything that our passport holders have access to for the entire 5-day period, or 7-day period if you include the weekend. We really want to give you time to explore all of the resources that are available to our members. And so, any day is a great day to take the free trial. But doing quick math, today's a great day to take the free trial. Now, when the live training room ends each morning at 11:30 a.m. Eastern, we take a 30-minute break and we come back for this broadcast, the afternoon broadcast, which is open to the public. That's everybody, everywhere on planet Earth with an internet-connected device. There are 2 different ways to join the afternoon broadcast live. Best way, because you only have to do this once, go to mytradingiq.com, scroll down to where it says Afternoon Broadcast. Click the link. There's the 30-second registration form, and you're done. Going forward, what will happen is every trading day, you'll get an email about an hour before this broadcast starts. In that email, there will be a link. So at 12 noon Eastern, all you have to do is click the link in the email, and it'll automatically log you into our platform. The benefit there is you have access to the question box, so you can ask questions and participate in the discussion. Of course, there will be days when you're out of the office, away from the desktop, but you still want to join live. You can. And there will be days when you're busy, can't join live, but want to get caught up later. You can do that too. Of course, I'm talking about our YouTube channel, youtube.com/CFRN. Easy to remember because you already know the YouTube part. All you really have to remember is the CFRN part. And not only do we broadcast live every trading day on our YouTube channel, as we're doing right now, we're simulcasting on YouTube and our own platform, but we also archive each and every daily broadcast. Currently, there are over 2,400 daily episodes archived for your educational and viewing pleasure. And if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week. Thanks to the power of YouTube, you can see how we've evolved over the years. You can scroll back 6 weeks, 6 months, a year, 3 years, even more. Just pick some days at random. Listen in a little bit. Fast forward, listen in a little bit. Switch to another day. You'll discover the thread of connectivity, the thread of continuity that's woven through each and every daily broadcast and our very vibrant trading community. youtube.com/CFRN. Let's open with our daily devotional and a word of prayer, as we do every day. Then we'll get into the markets, and about 12:45, Michael will join us and give us a recap of what happened this morning in the live training room. Then we'll go live for a half hour on the TradingView platform, do some live trading. Then we'll wrap things up with our good word for the day. Now, the topic of our devotion, which began last week and will continue into next week, giving it all away and getting it back again. Scripture today. Listen up because it's short. Genesis 22, verse 1. And I'm sharing from the Message translation. After all this, God tested Abraham. God said, "Abraham?" "Yes," answered Abraham. "I'm listening." Genesis 22, verse 1. You get to read the rest of the chapter yourself. So let's talk about the journey into generosity. Remember, the topic is giving it all away and getting it all back again. At the core of any meaningful life and legacy has to be a vision for generosity, an understanding of what it means to be a blessing for others. The value of giving to church, to mission, to people must first be modeled, then taught, so that the next generation embraces generosity as their calling. Once a person embraces a concept like generosity as their own, then it's much easier to understand the responsibility attached to it. In my own journey, I've discovered that the timing of generosity reveals your heart to God. That step of writing the check or hitting the donate button online can seem daunting, but it all comes down to trust. Do I really trust that God is the same God stayed Abraham's hand from slaughtering his son and provided a ram in the thicket for the sacrifice? If my answer is yes, then that carries consequences, good ones too. It means that as a consequence of God's provisional faithfulness, I can take joy in giving, even in hard times. Often God just wants us to take the first step. It can be as simple as making a plan to get out of debt, or a plan to support a missionary family for a decade. It's the first step. Once we commit, I found that God is quick to reveal himself in that endeavor. It doesn't matter whether we give out of wealth or humble circumstance. God can't wait for us to step into the joy of generosity. We just need to trust him and take that first step. Here's something to reflect on. Was there a time you knew God wanted you to do something hard and with extreme faith? Did you go through with it? Or did you end up regretting not doing it? Join me in a word of prayer. Heavenly Father, as we come before you today in prayer, the scripture we shared reminds us of the obedience and faith displayed by Abraham when you called him to sacrifice his son Isaac. Lord, we marvel at Abraham's willingness to trust you completely, even when faced with such a difficult and painful task. Lord, we ask that you grant us the same unwavering faith and obedience that Abraham demonstrated. Help us to surrender our wills completely to yours, trusting that you always have our best interest at heart. May we be willing to follow you wherever you may lead, even when the path ahead seems uncertain, challenging. Lord, as we offer ourselves to you as living sacrifices, may our lives be pleasing and acceptable in your sight. May we be willing to lay down anything that hinders our relationship with you, knowing that you are worthy of our complete devotion and allegiance. Give us the strength and courage to obey you, Lord, even when it requires sacrifice on our part. Help us to remember that the plans you have for us are good plans, and that you will never lead us astray. It's in Jesus' name we believe and pray. And everybody said, amen. Amen, and happy Thursday. Now, being a Thursday as it is, tonight is our members-only workshop. Starts at 8 p.m. Eastern. So if you've been on the trial the past week and you want to be in that members-only workshop tonight, then go here to mytradingiq.com. Chances are you've already received an email, but if you have questions, you can call 949-42-EMINI or send an email to support@cfrn.net. And then once again, the workshop starts tonight at 8 p.m. Eastern. Now, probably some are wondering, well, aren't you going to postpone it due to the State of the Union address? I don't know. Just popped into my head. We'll talk to Michael and see. Of course, you can record it on your DVR. And I'm not sure exactly what time it starts, so it might not even conflict. Let me give you the numbers from around the world. I'm going to start here in the U.S., the cash markets, or the indices as they're called. Currently, the Dow is up 135 points. The NASDAQ is up 234. That's 1.5%. S&P 500 is up 49, almost 1%. The Russell 2000 bringing up the rear here, up 16 points, 0.75%. Actually, it's the Dow that's bringing up the rear. Now, in the commodity basket, crude oil down 7 cents, trading 79.06 last. Gold up $6.10, trading 21.6430 last. Silver up 13 cents, trading 24.62 last. In the Asian markets at the close, the Nikkei fell 492 points. That's 1.25%. The Shanghai dropped 12. The Hang Seng fell 208, which is over 1.25%. And in the European markets at the close, FTSE up 13, the DAX up 126, the CAC up 61. No movers, no shakers there. So it was a red day in Asia. It was a green day for the UK. And it is a big green Radio Thursday here in the US of A. So with that, let's jump to Logic 247. That's our 24/7 around the clock E-mini alert service. But it's not just the E-minis. It's also crude and gold and silver and the euro and bonds. We are currently in week 292. Over the last 292 weeks, we have issued over 16,200 individual handcrafted alerts. And we've averaged 20% or less of the alerts being stopped out on a weekly basis based on market structure and a very simple process that we teach all of our passport holders. This recap was done this morning at 6:45 a.m. Eastern. Valerie will update it this afternoon, again this evening. But this is where we stood at 6:45 a.m. Eastern this morning. Since the markets opened this past Sunday night at 6 p.m. Eastern, we've issued 32 Logic 247 alerts. We have 2 different alert services. The Logic alerts can come out around the clock. Futures trade around the clock. We have traders around the globe. So an alert can come out at 2 a.m. or 2 p.m. as opportunity presents itself. So again, since the markets opened Sunday night at 6 p.m. Eastern, we've issued 32 Logic alerts. And at the time of the recap this morning, 8 of those we were still awaiting the outcome. That gave us 24 actionable alerts on the week, of which 2 or 8% would have been stopped out, again based on market structure and that very simple process that we teach our passport holders. In fact, it was this morning that we hit 16,200. So now we're just over 16,200 individual handcrafted alerts over the last 292 92 weeks. Now, way before Logic 247 was even a gleam in my eye, we had our original alert service, the concierge trade alerts. And they're a little bit different in a couple different ways. Number one, they don't come out around the clock. They're posted as a static report shortly after the Globex Open each evening. Now, we all know that today is the Thursday session. But if you come from the world of equities, you may not know that the Thursday session actually starts Wednesday night at 6 p.m. Eastern. It will be the Thursday session until 5 p.m. Eastern this afternoon, 1 hour after stocks stop trading. The markets will then go quiet for 1 hour, and then tonight at 6 p.m. Eastern, the markets will reopen, and that will be the beginning of the Friday session. Last night, I got them posted 5 minutes after the open. I try to get them out as soon as I can each evening after the open. I just so happened to be at my desk, and I didn't have anything else going on, and so I was able to get them out pretty quick. And we had a lot of two-sided action, so when we go to the charts, it's going to look nice. So what do you do with this report when it's published? Well, let me back up for a minute and talk about the logic alerts, the ones that can come out anytime around the clock. The logic alerts have an entry price followed by an initial target. That's designed to help you get your goal for the day. Then, as I look left at previous swing highs and swing lows, there may be a second target, a third target, a fourth target, a fifth target, and then a final trade to target. If it's a short alert, the final trade to target will be the weekly trading zone below. If it's a long alert, the final trade to target will be the weekly trading zone above. First thing you do when the report comes out, go to the 30-minute chart of whatever markets you actually trade. You can see the list here. Okay. So all of our members and all of our trial members had these targets last night, 5 minutes after the open. Now, since this broadcast is open to the public, if you want to grab a screenshot, you can. Or if you're watching after the fact, just hit pause on the YouTube video and jot down the markets that are important to you, because we'll walk through each one of these individual markets and see what happened before the end of the broadcast. The first thing you want to do when the report comes out is make note of where price is or was at this time on the 30-minute chart of the markets that you actually trade or are learning how to trade. That price will always be between these two numbers. While you're there, draw a line in the sand at the long target, draw a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Now, if price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. Now, the BBC is simply the green line you'll see on all my charts. It stands for bull, bear, cross. When price crosses above the green line, we're bullish and anticipate higher prices relative to whatever time frame you're looking at. When price crosses below the green line, then we're bearish and anticipate lower prices, again relative to whatever time frame you're observing. You'll see me today display both the daily chart of the S&P, and then all the other markets will look at the 30-minute chart, because all alerts, both the logic alerts and the concierge trade alerts, are based on the 30-minute chart. 30-minute chart is what I call my roadmap. That helps me to see and teach you how to find windows of opportunity in the market. Once you've spotted that window of opportunity, all you have to do is then wait for price to get there. At which point you then utilize everything you learn in the live training room each and every day to execute the trade with surgical precision on your range chart, whether it's the 7-tick range, a 10-tick range, a 15-tick range, whichever range chart you've decided you're most comfortable with. So that part's pretty simple. Now, our goal is for you to become self-sufficient. Hopefully your goal is to become self-sufficient. If you want to trade for a living, waiting on someone else to tell you when to get in and when to get out, you're never going to get there. It's just not going to happen. You need to learn how to read the chart, how to understand the way price flows across all markets and all time frames, which is pretty simple because it's the same from support to resistance, back to support, back to resistance, over and over, again and again. It's a never-ending cycle. It's been in place since the inception of the markets. It will remain in place until the markets cease to exist. Why? Because that's how markets work. Now, why has no one else ever shared that nugget with you? Well, because they have 1,000 different things to sell you, and they're cooking up new stuff every day. We've got our passport, which gives you unfettered access to all of our resources. Not only the live training room in the morning, but one-on-one mentoring, all of the alerts, so much more. The Thursday night members only workshop. Passport is really your all-access pass to everything we do and everything we've ever done. Now that message has changed, hasn't it? We talked about it in December and January and all through February that the lifetime passport was going to go away. Of course, not for those who are already a lifetime member. But our lifetime membership has now switched to an annual or semi-annual membership. But we gave everybody 90 days of warning, and people who are already passport holders or became passport holders before the window closed, you have absolutely nothing to worry about. For you, lucky you, everything remains the same. Now on the logic alerts, I look left for you to spot the obstacles. But as you're learning how to trade, see, that's a very valuable life skill. Because once you learn how to trade, no one can ever take that away from you. You can trade anything, anywhere, anytime. So with the logic alerts, I give you the multiple targets. As you step up your game with the CTAs, you get to look left yourself. See, it's a learning process. As you start using the CTAs, can you use the logic numbers as sort of a cheat sheet? Sure. But it's important that you learn to look at a chart and instinctively spot where the windows of opportunity are. You'll also learn how price behaves at a weekly trading zone. Only one of three things happens. 70% of the time, when price encounters a zone, it will be consolidation. 20% of the time, rejection. 10% of the time, a slice. Now, this is important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon, if price is above the 30-minute BBC, it's trying to reach the long target, or trying to reach the weekly zone overhead. If it's below the BBC, it's trying to reach the weekly zone below. We've published the zones every week for our members since December 14th, 2009. And yes, it is now 2024. Is that about 15 years? Closing in on it. It'll be 15 years, I guess, December 9th of this year. Other than that, just resist the urge to make it more complicated. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Let's go take a look at the daily chart. This is the S&P. Now, we had an all-time historic high on March 4th at 51.57.75. Today, March 7th, 51.61 and a quarter. Okay, so we're a few ticks off. I already bumped it up once to embrace the new high. I don't know if we'll get it much closer. It's kind of difficult on the... See what's that, 51.60, and what do we want? We want 61 and a quarter. We'll just stick with 51.60. It's close enough. Okay, basically we got a double top here. We have put in a slightly higher high today, okay, but only by a few points. And anytime you have a new high or low of just a little bit, you want to be very careful. Now, the reason we're looking at a daily chart is because institutional traders, the ones that actually move price because of their account size, they look at daily, weekly, and monthly charts the way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. So no matter what you trade, whether it's the S&P or a different futures market, maybe an individual stock, crypto, Forex, ETF, if you'll learn to spend just 2 minutes at the beginning of your trading session with the daily chart, you'll be able to identify major areas of support and resistance, and you're literally looking over the shoulder of those deep pockets who actually move price. Looking at this chart, it's pretty simple to see what's going on. A whole lot of buying up to this point. Things have gotten a little quiet. Okay. Now we're above the 62% fib extension. Now I'm running my fib extensions all the way from the low of October 27th to the high put in today, March 7th. Okay. The 100% extension is up here. This green line is the BBC, bull bear cross. When price crosses below the green line, we're bearish and anticipate lower prices. Back here on November 2nd, you can see that price traded through the BBC. Following day, we opened and closed above the BBC. That changed what had been a significant downtrend into an uptrend. We're still in the uptrend. Now, price always reverts to the mean. In our case, the mean is green and it's called the BBC. But you'll notice this pullback held, this pullback held, and this one, and this one, and this one. And we're due for another one. The question now is becoming, will it hold? Remember, we were in a downtrend for a significant period of time. So November 2nd of last year changed everything to the upside. At some point, we're going to trade below the BBC. It's going to stick. And I've been talking about this 50% retracement for some time. Currently, it's sitting at 46.63. Now, teach yourself, train yourself to spend 2 minutes with the daily chart of whatever you trade before you start trading. I mean, obviously, not a good time to be selling, right? It's the deep pockets that move price. As I said earlier, all the alerts come from the 30-minute chart. So we were just looking at the daily chart of the ES. This is the 30-minute chart. The vertical line you see here separates today, Thursday, from Wednesday, Tuesday. Now, when price drops to a weekly zone, we expect support until proven otherwise. When price rallies up to a weekly zone, we expect resistance until proven otherwise, like here. But price always reverts to the mean. See how we pulled back to both the zone and the BBC? Support. Whenever the market finds support, it's going to go look for resistance. Where did it find resistance? At the weekly trading zone. When it finds resistance, it's going to go look for support. Where did it find support? At the weekly zone. Until proven otherwise. It was 5 minutes into the life of this candle that the CTA targets were published last night. And as you can see, price dropped right through that zone and dropped right to the CTA short target at 50.92. Now something important happened right here. It's called a bullish cross. That's when the blue line gets above the green line. That's a bullish cross. When the red line crosses below the green line, that's a bearish cross. When you have a bullish cross that leads to an extended move, the first time price revisits that area, it will almost always be good support. And when the market finds support, it's going to go look for resistance. The pull back to the BBC holds more often than not. Resistance will again send the market looking for support, which it found at the previous bullish cross. Then price got above the BBC and the weekly zone, and in this case it overcame the bearish cross. It struggled with it here for just a little bit, but it didn't stop it this time. Price continued right on up to the long target. Now this drop here, this candle opened at 51.04 and a quarter. That's 12 points right there, 12 points. You only need 2 points to get your goal for the day. Then as we got above the BBC, and let's take ourselves above the bearish cross, because we know that can be potential resistance. So if we take it to about here, 51.16, up to 51.25, the long target, that's 9 points. Remember, you only need 2 points to get your goal for the day. We consolidated at the zone just like we did yesterday. That's what happens 70% of the time. Consolidation, that's what's happening right now. But after that consolidation ended, look what we did. We went from zone to zone. Now the step line, that's the black line, has crossed blue and climbing. So what's the next logical thing to happen? Price will retrace back to the BBC. Pullback holds more often than not. And if it holds, it'll give us an opportunity to trade once again long back up to this weekly trading zone. We hit the short target twice, hit the long target once, and then went zone to zone. Now, today's Thursday. These zones were published Monday morning at 6:15 a.m. Eastern. Once the zones are published Monday morning, 6:15 a.m. Eastern, they're carved in stone for the entire week. They don't change in any way whatsoever. That's the power of the zones. Once you understand how price behaves and is drawn to the zones, they will become one of the most important tools in your trading toolbox. See how we're getting this drop? Heads up was when the step line crossed to the right side. Okay. Come back and look at this before we're done today. Here's where the Dow opened last night. It dropped right to the short target. The market found support based off this swing low from yesterday. We bounced up to the BBC. The pullback held, sent us back down to the target, and back down to a little bit lower support. We spiked it, but this is where we closed. And you can see that's these lows right here. We get above the BBC, got the perfect stack, price, step line, blue and climbing, BBC, and we make a run to the target, to the zone, and then just like the ES, we go zone to zone. Get a retracement, back to blue and climbing where it holds. We make another run back up to the zone that was published Monday morning. The step line crossed, and look what's happened. Price has now retraced to the BBC. Over and over, again and again. Now, one of two things will happen. The pullback will hold. See, we're only 13 minutes into the life of this 30-minute candle. Either the pullback will hold or it won't. If it doesn't, then you want to let price get below this swing low right here. And then you can grab your goal for the day down to the previous bullish cross. Bullish cross led to an extended move to the upside. First time price revisits that area will almost always be good support. Now, a lot happens in a 30-minute candle. So while it looks like this pullback won't hold, let the candle finish. Let it complete. Don't jump the gun. Okay? Be patient. Because by the time this 30-minute candle closes, we could be halfway back to the zone overhead. On the Russell, here's where we opened last night. Got below the zone, dropped to the target, traded through the target to the bullish cross. Now, these are some beautiful examples. Remember what I said. When you have a bullish cross that leads to an extended move, the first time price revisits that area will almost always be good support. It was, and it was again. Then we got above the BBC, got a leg, got a retracement, pullback held. This is support times 2. When price drops to a zone you expect support, and as you can see, the wick extended down to the BBC. Pullback holds more often than not. Set us up to this zone, had a little retracement, and we came just shy of hitting the zone at 2100/2101. This is the highest weekly zone for the week. Okay, and what are we doing now? What we do 70% of the time when price encounters a zone. Consolidating. On the NQ, here's where we open. We dropped to the target, through the target, and this area right here became good support. Support will send the market looking for resistance. Resistance will send the market looking for support. Now this zone 902/903, we didn't quite get all the way to it. But all the markets were so bullish. The NQ being probably the strongest of all today. Got above the BBC. There's that perfect stack. Took you right to the target, to the zone, where we consolidated for a few hours, and then continued the journey all the way up to the zone at 18,254. And we got one more zone left overhead. Nope, we have several. We still got 1, 2, 3 zones left overhead. Okay. Crude, here's where we open. Pulled up to the BBC, found resistance. Price dropped back below the BBC and hit the short target. Continued all the way down to the zone. Support sent us to resistance. Resistance sent us to support. And if you look left, you'll see that bullish cross. Very important. Price gets back above the BBC. Now it's wrestling with the resistance established at 8 p.m. during the 8 p.m. 30-minute candle last night. You see this high, 79.36, this high, 79.33. So we're 3 pennies short of taking out that high established last night. If we can overcome that, then we'll complete the run up to the long target. Michael should be here by now. He may be having trouble logging in again. I don't know. He had some difficulty yesterday. Michael, if you can hear me, send me a telegram or something so I know where you're at in the process. All right. So after crude, gold, here's where we opened. Dropped to the BBC. The pullback held. Sent us right up to the target and through the target. Spent a lot of time consolidating along the target. And it's kind of just been sideways for gold today. We've had some big moves in both gold and silver over the last few days. Here's silver. Here's where we opened last night. We dropped to the BBC. We spiked it a little bit. Recovered. Spiked it again. Red and falling turned to blue and climbing. So we had a leg and a retracement, a leg and a retracement, and then a leg that took us all the way up to the target at 24.53. Price is now retracing. See how the step line crossed to the right side of blue and climbing? So we anticipate price coming back to the BBC. If it holds, it'll give us an opportunity on the long side. If it doesn't hold, then we'll have an opportunity on the short side, down to the bullish cross. I think I hear Michael now.
Yes, I'm here.
Euro was flat until early this morning. Dropped to the short target and the zone. Support. Support will always send the market looking for resistance. Got above the BBC, we hit the target, and we came just a few ticks shy of the zone. But as in the other markets, the step line is starting to hook right, so we're expecting a pullback to the BBC. Michael, if you're ready.
Yes. I am ready. Okay, let me take it over here. Take it over to my side. All right, here we are.
All right, looks good.
All right, so good afternoon, everyone. If you have not taken a free trial with us, well, today is Thursday, the 7th day of March, 2024. Now, if you have not taken a free trial with us, go to mytradingiq.com and right here, click on the purple button. Okay, click that purple button. You will be sent to this page right here, the registration page. Just fill out this form, all right? We don't ask for anything much here. We don't ask for any credit card or anything like that. First name, last name, email, phone number. Down here, if you're using TradingView, give us a TradingView login ID. If you have an NinjaTrader, give us your machine ID, and we'll get your indicator set up for you, all right? As quickly as possible. Now, the results. Today, we had a pretty good day today, as we do pretty much every day. Yeah, stuff is stuck right here. Well, I'll tell you, I just refreshed. Anyway, hey, if you're going to read the spreadsheet, you have to read all the C's here. Simple. I said that already. But today, it took 26 minutes and 5 trades to get to the goal for the day. Now, with 15 contracts on, at that point, we're at $1,950 per contract. Okay, $1,950 per contract. Today, we made 87 ticks in the NQ, we made 2 ticks in the Russell, and we lost 7 ticks on the ES. We're break even in gold, and we didn't, I'm sorry, did we trade gold? Yeah, we're break even in the gold. We didn't trade crude oil. So on the month, that puts us at $1,897 over 5 business days, averaging $379 per contract for a 2-hour business day. On the year, we're at $17,305 per contract. That's over 46 business days, averaging $370. There it goes, averaging $376 per contract per 2-hour business day. It's got it all the way back there to the middle of the month, in the middle of last year. But all the stuff that I just told you is right here now. Okay, right here. 87 ticks on the NQ, 2 ticks on the Russell. We lost 7 on the ES, right? 26 minutes and 5 trades to get to $1,950. We took a total of 15 trades this morning. On the month, 1,897, averaging 379.50 on the month, daily on the month. On the year, averaging 376.20 daily on the year. If you were to quit trading when you get your goal for the day and you were to add 1 contract per month, so far this year we've only had to work 19.18 hours. That's the important part right there. The 19.18 hours. If you started out with 13 contracts in January and you upped it 1 contract per month like we have so far, quitting when you get your goal for the day, so far this year you would have averaged $4,694. Now, why start out with 13 contracts? It's part of the 24/20 blueprint. I'll get into that, just not right now. You would have averaged $4,694. All right, so let's get into the actual trades that we did. All right, now we had 15 trades, which is a fair number. It's not a bunch, it's not too little, but it was pretty good. On the gold, we had, I believe, did we have any trades here on the gold? We had 1 trade on the gold. It ended up being a break-even trade. I don't even remember if I marked it. Yeah, here it was right here. We had this trade on the gold. It ended up being a break-even trade right here. Now, if you guys don't know what you're looking at, if I take off the context, it doesn't look quite as intimidating, I don't think. So if I take off the context in here, and it's just some lines, take off the color like that. Now I got the other color left on there from the other one. You'll see it's just some lines. Okay, and the lines all have meaning. The color is there to help you identify the trades not to take. All right, the trades not to take to help you narrow down the higher probability trades. Now the lines even look worse, right? So you can take all this apart little by little, and I'll do that as we get into as I finish up the recap here. I'll go through and I'll take everything apart and we'll start over again. Okay. But for right now, these know is we only had 1 trade here on gold, and it was a break-even trade. The target table right here, that works off of the blue arrows, right? So these are all long targets that are based upon the last blue arrow, which was back here, right? The first target was this one right here. The next target was somewhere back there. The next target even further, further, and further. Looking back at all the prior swing highs and lows, right? Pulling out the targets for you. That was gold today. Now the Russell, we had a few trades on the Russell today, and we ended up, actually we only had 1 trade on the Russell. No, we had a couple. We had that one there, and that was a break even, and we had 1 other one that we had a +2 ticks on somewhere. Okay, let me slide it back. Here it was, up here. We had +2 ticks on this one right here. Right, again, the tables are working off of the blue arrows. The last blue arrow was a short right here, and that's what the table is working off of. It's giving you these targets based off of this blue arrow right here. Right, the next blue arrow that we get, if it's a long blue arrow, you'll have targets on the upside. Okay. The ES right now has got a long, it's like a one long target up above us. That's because these must be pretty close to all-time highs. If it's not good, if it doesn't have more than one target. It's looking right back here right now. From this one right here, it's looking right here. It probably didn't even have that. When we first got this right here, it wasn't considering that a pivot because it was too close, but it worked itself out to be when its price went sideways here. In the ES today, we had a couple of trades. Let's go back to the beginning. Oh, they're right here. I guess the beginning isn't that far back. Right here, we had to stop out on this one, -10. Now, that was a mistake. It had already gone 5 ticks into profit when I took the trade. That was a mistake. I ended up chasing that trade, and that was my fault. I stopped out on that, and that's kind of a punishment that I deserved, actually, for chasing the trade. No better than that. And so I stopped out, and then right here, I got 8 ticks back from that. So I ended up with just a -7 after this move right here. All right, I didn't take any more trades in here. I was doing the training all through here, and practically all through here. I did a lot of talking this morning, but went into a long no trade zone here. From a little before 11 to 12, a whole hour of no trade zone right there. And that was what the ES looked like. Now the NQ would drop it down here and blow it up a little bit. Let me take off the pivots on this because that's, oops, hang on, clicking on the wrong one here. Pivots on this. That's a lot to look at. If you're not using it, you don't really need to have it on the chart. Again, all the targets are based off of the last blue arrow. Okay, so you can see all the targets that were given from that last blue arrow. We'll go back to the beginning of the day here on the NQ. We started out on the NQ with the stop out, just like yesterday. We started out with the stop out, and then the next trade on the NQ was a 30-tick win, just like yesterday. That's how it worked out yesterday. We'll get back here to the beginning in just a second. We are almost there. Almost there. Okay. So here we go. This was our first trade right here. We stopped out -20 ticks. Now it did end up going down. It just took me out before it did. The next trade we took was right here. We ended up with a +30 on that. That put us at +10. Now the trade after that one right here, for some reason my strategy messed up and it didn't put a 30-tick target on it, and I ended up getting 39 ticks out of this trade right here. This is where we got the goal for the day. I got 39 ticks out of that. Now I had stopped out on the ES somewhere in between this trade right here and this trade right here. I stopped out on the ES. That's why I needed all of this to get the goal for the day. I needed 30 ticks plus, and the 39 ticks is what did it. We started the lesson plan, but I don't know why I ended up missing these 2 nice blue arrows right here. 3 nice blue arrows right there. I ended up missing all 3 of those nice blue arrows. I don't know what I was doing when I missed that. And I missed a stop out there too. So I guess it works out. I got a break even on that one, and from here we went from 49 up to 79, so I got 30 ticks on that. Another break even, and then we got into the lesson plan. I believe I might have taken a trade or 2 during the lesson plan. Yeah, here it was right here. Well, this is 11:15, but I did end up talking right through it all, I think. Here we got 8 more ticks to bring us up to 87, and I had 1 break even here right at the very end. During the break, there was 1 blue arrow here that went just enough to get the stop to break even. A blue arrow here. Now, all of these were working off of this. No, they should be working off of a short blue arrow. What the heck? Oh, I'm sorry. These are working off a short blue arrow way over here at the end. This blue arrow way over here. These are going back to these levels. I'm sorry. We're going from back forward. All right. So this is where all of these pivots are coming from. All of these target lines are coming from. There's a blue arrow here during the break that I missed, and a blue arrow here that I missed during the break. Both of those are nice winning trades. And you can see since then there was nothing else. That was the morning session. Okay, I'm going to go over here and start this last stream. The last stream I left running all morning accidentally. Anyway, here we go. We're starting the live stream. If anybody has any questions about anything, feel free to just type them in. Okay, if you have any questions about anything at all, just type them in and I'll be happy to answer them. Those of you guys who have meetings with me this afternoon, I will be sending you Ken S, you got to set something up with me too. Right, so we get you all squared away. Bar, I'll be sending you yours, and yeah, so I wrote that down. Bart, I have you at 2, and Jason, I have right after you. Okay. All right. So we're into the trading right now. I'm going to put the stuff back on here, but what I was alluding to just a minute ago is that I was going to take everything off of here so you could really see See what's important in here. Okay, I mean, everything's important when you understand what you're looking at. But if you don't know what you're looking at, then everything is just noise. All right, so let's get rid of all the stuff that could be construed. Oh, hang on, I'm clicking on the wrong one. So I don't know why nothing's coming off the chart. Get rid of all the stuff that could be construed as kind of noise right now. Okay, and let's just shut that one off altogether. And we'll go back in here and we'll finish taking things off on this one. We'll leave the BB3 on, the BB ribbon and the BB3. And we'll get rid of these arrows. We'll leave the blue arrows on. We'll get rid of the no trade zones and lines and the labels. Okay. And I'll get rid of the drawing objects too. Move the 13 objects. Okay. So we're left with just this. This is just what we're left with, and this is gold. So gold's not moving around a ton right here. The BBC is the leading edge of the ribbon. That's what this is right here. The BB3, the black line, is the trailing edge of the ribbon. Those are the important lines within the ribbon. When price gets below the BBC, we anticipate it's going to pull back up to it. When it pulls back up to it, we anticipate it's going to bounce off of it. All right, like that and like that. You'll see a bunch of different arrow colors in here. I only have the blue ones turned on. The blue ones indicate the highest probability trade setup. And why is it the highest probability trade setup? It's because price is pulled back to actually bounce off of something. So you have a long way to go between your entry point and the swing high usually. You're coming out of the oversold. You did not lose too much momentum on the pullback. You came back and you bounced off something solid. And did not lose too much momentum by going all the way through the ribbon into the black line. That's the green arrows that do that. That's why the blue arrows are the highest probability trades, right? You can see this a blue arrow right there that worked out just fine. I guess we didn't have that many blue arrows here today. That one there didn't work out so well. And the one right before it didn't work out so well either. But the blue arrows are really the highest probability trades. They really are. Not so much here on gold today, but we didn't have all that much action on gold. And they're the easiest trades to take. And you can actually get a trade that's going to look just like a blue arrow, but not be a blue arrow. That you can possibly, like this right here, for instance. You could have taken this trade right here instead of waiting for the blue arrow, because this hit the ribbon and gave an up close. That is a valid trade, even if you don't come out of the oversold. That is a valid trade right there. So you could have taken that right there before the blue arrow triggered. That's a possibility. Okay. This one right here, where it came out of the oversold, but it hit the black line on the pullback, would be a green arrow. Right here, green arrow. Okay. Just wanted to go over that because it just looks like so much on the chart there. And really, you don't need to pay that much attention. Oh, wow. Hang on. Bart, let me just check and see. Bart, we may have to reschedule. Okay, so onions. Hang on a second. All right. So on the NQ, we're looking for a pull back up to test the ribbon right here. We're looking for a pull back up to test the ribbon. And on the ES, we're in a no trade zone. That's what this aqua background is, a no trade zone there. All right. Right now, the NQ, we want that to pull back up and test the ribbon. Okay, we need that to pull back up here and test the ribbon. It hasn't done it yet. Let me slide this over and scroll up to here and see. All right, so that hasn't happened yet either. All right, let me move some things around here. I do for Mr. Okay, I will put it up there in just a sec. Let me bring that up. There you are, Hitchcocks. Okay. Stream just died. Also, mic very trebly. My thoughts on Mr. Is my mic okay to everybody else? Okay. Everybody else thinks it's loud and clear. I will. Oh, okay. Let's change this. Let's change this to Mr. MSTR. MicroStrategy. I'll change it to a daily. Okay. When that gets over, we'll analyze that. All right. So the NQ is about to give us a trade right here. All right. Let me do both things here if I can. Russell is given a trade coming out of the weekly trading zone, right? The NQ is potentially given a trade. It hasn't actually given a trade yet, but let me look at the Mr. right here. Let's look at the Mr. really quick. This is on a daily chart. And what I was looking for on the Mr. when the pullback happened out, this is a while ago, we were expecting it to do this, get up into here, and then get up to this level, this one here, which it did do. And then it went right through it when Bitcoin took off. It went right through it. And then back then, I was saying the pullback was going to be down into this level. The pullback is now should be down into this level when it does pull back. But you see what's happened right here from a daily perspective. It hasn't pulled back very deep. It's got another run in it, it looks like. What I was looking at yesterday with Bitcoin, if it were going to keep going up, I got to get rid of all these other drop. Well, I'm going to get rid of these. Actually, those are for a different symbol, so I'm going to leave them there for now. What we're looking at with Bitcoin yesterday was after the pullback. We're looking at the trend. We were looking at the leg lengths yesterday. The leg lengths on the way up, right? So this obviously exceeded that leg length by far, right here, right? We're looking for that leg length, and that's when we're looking back over here. We're looking for something like that. And now I would say this is a huge move up right here. I don't want to really suggest that that is what the leg length is going to look like. The next leg length, because it's such a huge move up. If you were to just use that as a leg length, then it would be huge. But I think it's going to be smaller than that. Yeah, I think this is right. What I've drawn here is about right. When it finally settles in on the pullback, so far it's just right here. So it's not really much higher than where it is. It's just looking like it's going to get up to 1388. 1388 is what it looks like right now. It'll probably go higher than that. I would say probably half of this leg length. But this is rational exuberance. I created this. You still have a huge gap right there. You have gaps all the way in there. So it's just kind of hard to. It's kind of hard to figure right now, because this whole move up. Well, it was based on a lot because of Bitcoin's move up. Chart wise, I would say look for it to get up here to 1388 is what I would say from where it is right now. I mean, I know that's not very much from where it is right now. But when it does pull back, I would say look for the pullback to be in this range right here. It's going to be right about where that blue arrow and that blue circle is, just a little above it. Oops, just a little above it. Okay, right about here is where the pullback should come down to. Here, I could use that one, but I'll just draw a new one. Right over here is where the pullback should come down to. I don't know when it's going to happen. Right? I have no idea when that's going to happen, but I thought that it was going to hit this level over here, finish this leg up. Back when it was down here is when I thought that leg up was going to finish, and then it was going to do another one, pull back down to this level. So, it's tough to call right now because it made such a big move there. But that's what I think about Mr. Okay. Now we had a trade here on the Russell that I put on. Here it is. I'm going to throw my stop at break even. I totally forgot about that. We had the blue arrow trade there on the Russell, and I'm going up to plus 10 ticks right there. Now, let me go over here really quick. I still made a group meeting, but we didn't know what time. Okay. All right. So my thought was on Mr. Let me jump back over here and look in here and see if you asked anything else about Mr. That was Hitchcock's MicroStrategy. Yeah, it's a Bitcoin play, but commission investors need to stay in. Can this continue? It can, but it's going to have a pullback at some point here. Bitcoin and MicroStrategy are going to have a pullback, and that's what I was looking at yesterday. Now, if you look at the Bitcoin in here, BTC, if you look at the Bitcoin in here, Bitcoin is doing the same thing. It's giving a little bit of a rally right here. Now, when is this going to end? Well, for Bitcoin, I had drawn 72,000 up here, 74,000 is what I figured yesterday. Right about here is where that's going to end. So the Mr. will probably do whatever Bitcoin does, is what I'm thinking on that. Hitchcock's okay. That's what I'm thinking on that. I don't know why it does this to me, but that's what I'm thinking on that. I go here, go back here. All right, well, we'll wait till it comes back. The Russell's pulled all the way back down to test the ribbon. What did I do on that? I took 10 ticks profit on the Russell trade. Okay, the last one was a blue arrow trade from back here, I believe. This is on a 4 range, so I'm going to put it up. This needs to be on a 15 range. This needs to be on a 7 range. And the blue arrow was right in here. So I took the blue arrow trade from here. I took 10 ticks profit. That's pulling back now to give another trade set up. It's just about there. I go back here. Is that back together yet? It is. Okay. So the Bitcoin right now, this is what I was thinking the Bitcoin is going to do. It's going to get up to here. And if it does rally up to there, I think you're going to see the Mr. rally up with it. Okay. I don't know exactly what's going to happen with that, but that's what it looks like from a chart perspective. On the gold here, we're pulling back and testing the ribbon. Now we're testing the ribbon here without testing the black line in the ribbon. What the heck? Without testing the black line in the ribbon here. Okay, so right here, when it pulls back down, if it gets into the oversold, it could have an arrow coming off the ribbon. But if it doesn't get in the oversold, if you end up close from right here, it's not going to give you any kind of an arrow. All right, but it'll still be a valid trade. Now, that trade can be found, that trade can be found in, man, did I not give myself a note? That trade can be found, excuse me. Here, now it is oversold, so it's going to give you a blue arrow. What I was suggesting is you go here to mytradingiq.com and you go to trade rules. That will a slingshot. So it would have been this one right here, a long trade without the slingshot. It would have satisfied that if we got enough close on that bar. But now it's going to be a long trade with the slingshot. Okay, it's going to be that rule right there. That's what's going on. Again, that was mytradingiq.com, the trade rules page on that. Okay, because now we're oversold. A minute ago we were not oversold, so you didn't have the slingshot helping you with this trade. Now we are oversold, but we have not hit the black line on the pullback yet. If we don't hit the black line and we get enough close, and it pulls it out of the oversold right here, that would give us a blue arrow. All right, the blue arrow is the highest probability trade. That's what you would get right there on the gold. So what can you do about this? Well, you know ahead of time where the bar is, right? The low of this bar is right here is 65.0. So the high of the bar is at 65.0. It is 65.0. So the high of the bar is going to be right here at 65.7. So I can put a buy stop and middle order on right there at 65.8. I can be proactive and put that order on ahead of time at 65.8. Okay, so if we get enough close right here and it pulls it out of the oversold, it's going to give us a blue arrow. if it does not pull it out of the oversold, it's not going to give us any error, but it's still a valid trade. Right? Again, that was going back here to this. If it does not pull it out of the oversold, then you don't have the slingshot part of this. So it would be the top one. It would be without the slingshot, right? Because it's not pulling out of the oversold, you're not going to get an arrow. But if it does pull out of the oversold, then right here is what you're going to get with the slingshot. Okay. So we'll see if it does pull out of the oversold there. It hasn't hit the black line yet. If it hits the black line, then that changes things a little bit. Okay, because then it'll be a green arrow, and then it has to pull out of the oversold to be a valid trade if it hits the black line, because the black is no longer going to be in the right color. I know I don't have the context on there. I took the context off so it would look simpler for you. But if I did have the color on here, the black would be in the green right now. Right, the black would be in the green like this over here. The black would be in the green like that. And there it is. It did give us the close up, it did give us the blue arrow, and we did get triggered in. And we only got one tick slip, which is nice. Now in the lesson plan this morning, for any of you guys that were watching the lesson plan this morning, I was teaching about the DOM and how to read the DOM. You guys can see it, 2167.0 is where this should go on the upside. But also note all the numbers on the downside. At 2165.4, 2165.1, those are significant numbers on the downside. So we're going to be eager to get our stop to break even on this once we hit 4 ticks in profit. You have to go one more tick. One more tick here. There it goes. All right, that was enough for me. Me to get my stop to break even on this one. Now, if we go back and look at the rules for the trade management, all right, all this stuff is here on this page. All right, we end up with a break even. All that stuff is here on this page. This is a 7-tick range bar with a 10-tick stop. The stop goes to break even after 4 ticks in profit. It just tapped 4 ticks in profit, and I was really wanting it to get to that 4 ticks so I could hit the stop to break even. And that's what I did. It just took me out to break even. All right, these are the rules for the risk management. Now, the exit rules are right here. All right. Now, if you look at the exit rules, they say look after the prior swing higher low for nearest support resistance, which I did. And then the second rule here says learn to read the DOM for potential numbers the price is searching for. It's part of the training you receive once you are a partner. Now, I just read the DOM once I was in the trade. And the DOM was saying it's going to get up to this level right here, 66.8. Well, it's not showing that anymore, but the DOM was also suggesting it's going to drop down to this level right here. Okay. So I managed to trade according to the rules. And like right now, 66.9 is what the DOM is saying right now. Okay, 66.9 is what the DOM is saying it's going to go up to. 65.4 is what it's saying it's going to go down to. So what's it going to do first? I don't know. I prefer to have it all in one direction than back and forth because it looks like it's going to give us some chop is what it looks like. Right? Does that make sense to you? From the lesson plan today, the lesson plan today was to read the DOM, and that's what I just did for you. I just read it right out loud to you. It says it's going to go up to 66.9. 66.9, and it says it's going to pull back to 65.4 right there. So it's almost down to the pullback spot already. And we entered in here at 65.8, and we bumped our stop to break even after it went up to 66.2 is where we bumped our stop to break even. It went up to 3, but we bumped it to break even once it hit 2. And so it came back and took us out of break even. Now, what do we anticipate? Well, whenever you get a blue arrow, you anticipate that you're going to exceed the prior swing high, right? Or you anticipate any blue arrow is going to do that. Now, will this do it? Maybe. But we've followed the rules and we're out of the trade right now. We're on the sideline waiting to see if it does. Okay, if it does, great. If it doesn't, well, it doesn't. But you see it's pulled back down to this one right now. I stretch that out a little. It's pulled back down to that right now. Taking out those numbers down there. Now, did it highlight any more down there? Not really. It still has 65.4 numbers, the major one. And so it looks like it's going to get into a little bit of chop right here. So I'm happy to be out of this trade right now. All right, I'd rather be in something that's just going to bounce me and move like the Russell trade did over here. You got in that one, we took 10 ticks profit right away. jumped off for a minute on that, but we did. All right, Hitchcock's. Did I answer your question to your satisfaction in live stream? I missed some questions this morning on the live stream because well, I had left it running and I didn't realize it. So the live stream from this morning ran for a couple hours. It ran for 3 hours this morning. That is a long live stream. All right. Let me jump in here. All right, so this pulled back even deeper. So now let's look at the DOM again. There's nothing really showing anything on the downside to this on the DOM. But if we were still in this trade, we'd be right at just about the stop out point right there. We would have a 10-tick stop. So we were in at 5.8, and the 10-tick stop would have brought us down here to 4.8. So it would have been 1 tick away from stopping out if we did not have aggressive risk management on that trade. All right, so I'm glad I got that resolved. We had another blue arrow here. I'm sorry I wasn't watching that. I had a meeting that I accidentally double booked for right now. So I was trying to resolve that. Sorry about that. Yeah, I have 2 other meetings and a possible 3rd and now 4th meeting that I got to do after this. So we have a blue arrow right here now. This blue arrow should put in a higher swing. It already has. So let's look at the DOM here on the Russell. All right, we don't have as much information on the Russell as we do on some of the other ones. Right up here, right here at 90.8. It was showing some numbers up there. If you look at the totals down here at the bottom, it's suggesting it's going to go down before it goes up, and where it's going to go down to, it's suggesting is 89.1. Right. So where's that going to bring it? 89.1 is going to bring it right down here toward the ribbon. Right. It's by the time it gets down there, it might actually be at the ribbon when it does that. And 90.8 is on the upside. Okay, so 90.8 is just right up here. Now I'm just reading this straight out of the DOM to you. Okay. And that was part of the lesson plan today. And 89.1 was the other one right there. That's what it's looking like to me. You guys all see that? Anyway, that was in the lesson plan today. Do you guys understand that? See that in the DOM? Okay. So, Hitchcock, let's look at something else here. This is what Bitcoin looked like here. Now, let's look at it in one other place. We've got Bitcoin and Ethereum over here on this. Okay. Once it loads up and I do this, we can look at them here. This is Bitcoin on the 30-minute chart. So Bitcoin on the 30-minute chart using this. This is TV Trades, TradingViewTrades.com. If it gave a long trade back here with a stop down here. So the long trade was back here at 66,800 with targets at 67,602, 67,654, and 69,324. Those are the targets. All right. So it's already hit these two targets. It's already hit those two targets. So the next target, okay. So the next target is 69,324. That's the all-time high. It's right over here. That's the all-time high. That is the next target. Oh, it's actually not. It is. Yeah, it is. That is the all-time high. That's the next target up on the Bitcoin. Okay, and it gave that signal in the wee hours of the morning at 0300 today. Ethereum, look at Ethereum. We'll see when it gave a signal. When it loads up here. Okay, it gave its signal at 8:30 this morning. It actually gave one over here also last night at 11:30 last night. Give a buy in here at, well, this buy, if we get a replay, let me go back here. This buy came in at 36.50.95 with a stop of, you can move the decimal place over 2 points with a stop of $35. And the first target was 38.29.93, 38.29.93. So you can see it's done all that and hit the first target. This was the first target right here. Okay, so if we go to the end, and this is the current one, we shut this off. Yes, shut that off. We go here where we currently are. This entry point right here said to go long at 3808.9 with a stop of $37. And the targets up here of, you can see the target that way. The target, first target was 3,999, the next target is 3,903.42. So it hasn't hit either one of those targets yet. Okay, but that's what it's got for the targets. Using this tool right here. Okay. This is called TV Trades or TradingViewTrades.com. Go to tv-trades.com. That works too. Or TradingViewTrades.com. Either one. And that is that. So let's bump it back in here. Just futures. Okay. It's 1:20. We only have a couple of minutes left in here. So this one is getting up to that where we thought it was going to go. This one is getting up to where we thought it was going to go. This one went right through the downside here. That's what I was afraid of. When I saw those big numbers on the downside, I was afraid it was going to keep going. So if you look at this one more time, on the downside now, on the gold right now, gold is given a big target on the downside. It's 64.5 on the downside. 64.5 right here on the downside. Now we don't have any reason to trade it, right? But that's what the done is saying it's going to go down to 64.5. It's already gone there once, but it's saying it's going to go back there again. On the upside, it's saying it's going to go up to 65.8. So this is kind of what I was afraid of. It was going to turn into some chop. 65.8 is what it's saying on the upside right now. So it's just saying it's going to be in some chop right here. You best not trading it at all. We don't have a trade set up for it. Fortunately, we did have one trade set up and it was a break-even trade. And we haven't had a trade set up since. Okay. All that is working exactly as it should. And I haven't been watching the MQ. We did have a green arrow trade right there that worked out. This first one, if you took the first green arrow right here, it would have stopped you out to the tick. Okay. If I was watching it and taking it, it would have stopped me out to the tick if I had taken it. And I probably would have. I mean, it's pulling back right now. We're running out of time. We just ran out of time. Pulling back right now, about to give another opportunity to trade right here on the NQ. Now, if it were to hit the ribbon, it would be the same thing we had over here with the blue arrow, right? It just hit the ribbon. We're not in the oversold, so we need an up close from here. It'd be a bounce off the ribbon. All right, you get a low here of 20. You're gonna have a high of 24. So you'd be buying 24 right there, like that. Okay. I know I just ran out of time right here, but after 8 ticks and profit, the stop goes to break even. So it's gonna get up to 26.25, and I'll bump the stop to break even, and maybe we'll be able to execute this one trade. There, it just went all the way up to 26.25. So now the stop's at break even. It should go up above the prior swing high, up above this level right here at 31.75 right now. 31.75. And look, we have a 30-tick target right up there at 31.50. So that would be great if we get up there. All right. So we're just following the rules. This This trade right here ended up being a break even, but this trade right here was the same exact rule as this trade over here, except this one came out of the oversold and this one did not. All right. So we ended up with the break even on that. All right. I don't know if I've said this yet, but if you haven't taken a free trial with us and you want to, go here to mytradingiq.com. This is where you sign up for the free trial. This is where you get the indicators. Click on the purple button. No credit card required for the trial. Sign up there. It's going to bring you to this registration page. Just fill out, put in your name, email, phone number down here at the bottom. Gives you TradingView login ID. Okay, gives you TradingView login ID, and we will get you all set up there. Okay, that is all that you need to do to get set up for the trial with us. All right. That is everyone. With that, I'm going to pass it out to Fabulous Phoenix, Arizona in studio. He has a blue arrow right now. I'm going to pass it out to Fabulous Phoenix, Arizona in studio. Overlooking South Mountain, America's largest city park. Dwayne, if you are
ready. Yep. The State of the Union address is 9 p.m. Eastern tonight. Our members only workshop is at 8 p.m. Eastern. So to all members, try to have your questions ready so that we can get through them in an hour, because I'm sure some people would like to not only watch the State of the Union, but there could be some market volatility based upon how well or how poorly things go. So I have no doubt it will create some trading opportunities. So I just Googled it up. What time will the State of the Union address be? It's set to begin tonight at 9 p.m. Eastern on. That's from CBS News. I thought I had heard somewhere that they were going to start it earlier this year. But nope, at the whitehouse.gov it says 9 p.m. Eastern, Thursday, March 7th. Okay, so recap of the morning session.
Today, recap of the recap. It took 26 minutes and 5 trades to get to $1,950 this morning.
Good job.
All right.
Okay, guys, we made it through all of the markets. We can see what's happening here. The last one we left off on was the euro. And I had mentioned that the step line was starting to hook right. Okay, when that happens, that's an indication that price will potentially pull back to the BTC. We're also at a weekly zone. In fact, it is the highest weekly trading zone this week for the euro. So, retracement back to the BBC. If it doesn't hold, watch this area right here for potential support. Now, on the ES, step line had crossed, and we talked about the potential for retracement to the BBC a little bit earlier. Price has pressed higher. The zone is 51.58.59. But here's the rub. Blue and climbing has now gotten directly above price. On your way up, it's your friend, but when it gets directly above price, then it can become an obstacle because it's on its way to becoming red and falling, which is bearish, not bullish. If price can overcome blue and climbing right here, then there's a pretty nice 15-point trade from about 51.70 up to 51.85. Now, we might not make it all the way to 51.85 today, so based upon your account size, whether you can hold that position overnight, check with your broker or either. If you have that sizable of an account, you probably already know whether you can take it home or not. Okay, so that's where we are on the ES. Dow, we got red and falling overhead. See, that's what when blue and climbing gets directly above price, becomes red and falling. And red and falling becomes blue and climbing. Okay, it's a real heads up, like look here. Okay, this huge fall that we had. Today's Thursday, Wednesday, Tuesday. Vertical line separates the days. Session opens at 6 p.m. Eastern each evening. It's 5 minutes into the open last night when these targets were published. But as blue and climbing turned to red and falling, look at this huge drop we took back on Tuesday. Okay. Russell, we spent hours consolidating at the zone. Blue and climbing's directly above price. We're printing a red candle, so price is trapped. Resistance overhead and support ×2 below, because the step line is directly below price. That makes it potential support. And then, of course, the zone 2087/2088, that's potential support. On the NQ, trying to make a run at 18,439. There are still three more zones overhead for the week. Price is really trying to get to. We see how it's overcoming blue and climbing here. That's a little unusual. I mean, it happens. I mean, it happens in some market every day, but this irrational exuberance is going to come to an end. So, I mean, you've had one heck of a ride up since the bullish cross this morning. Okay, bullish cross, and then this. Okay, so you got to start being careful. Where should you expect resistance? Well, look at that. Thursday, Wednesday, Tuesday, Monday. Swing high Monday afternoon is right where we're at right now. So the question you have to ask yourself is, can price overcome that resistance that it couldn't overcome on Monday? And if it can overcome that resistance, can it overcome that resistance? And what about this double top? Here's Friday, here's Monday, double top. So you just probably want to let it get to 18,400, and then you got a nice 40-point potential move. At $20 a point, that's $800 per contract traded. I think on every market today, we hit the short target and the long CTA target. Keep in mind, these are different from the logic alerts, which we talked about at the beginning of the broadcast. We've now published, over the last 292 weeks, 16,200 individual handcrafted alerts. And we've averaged on a weekly basis 20% or less being stopped out based on market structure, in a very simple process that we teach all of our passport holders. This week, as of the recap Valerie did this morning at 6:45 a.m. Eastern, we were sitting at 8% stopped out. Crude, hit the short target, and we came a few ticks shy of the long target. But we are pulling back to the BBC. We have blue and climbing in the picture. And so the next candle could very well start printing green. And if so, your window of opportunity would be 79.20 up to 79.40, $200 contract traded. Gold just still creeping sideways. Had some good movement in gold of late. New all-time highs, etc. Silver. We talked about this already. The step line crossed. So that pullback that we said we would probably see to the BBC, it is underway. Question becomes, does it hold or not? Okay. Patience is a virtue, especially when trading. So back to the daily picture. Got a slightly new higher high at 51.64 1/4. That's an all-time historic high. Now, it's easy to get caught up in the bullish exuberance, okay? But remember 2000, the dot-com bust. Remember the mortgage-backed security bust, 2007, 2008, okay? Am I calling for an imminent crash of the markets? No. But we understand how price works. It moves in legs. Eventually, okay, this is a pretty big leg. From October 27th, we were trading 41.67. And from 41.67, we're now into March. And we've got a new all-time high, 51.64. Basically this is a 1,000-point leg. Okay. Now, a 50% retracement or a 500-point drop put us back into this area right here, which I think is quite reasonable. On the way down, there's potential support at the 24% retracement, the 38, the 50. Could we trade through the 50? Of course. I mean, for us to get a 100% retracement would not mean the world has come to an end. The deeper the retracement, the more distance you have to trade back to the previous swing high or swing low. So if you're an investor, a 50% retracement now that's a 50% retracement of just this last leg up, okay? Not since the inception of the markets, okay? I'm talking about a 50% retracement since this low put in October 27th. A 50% retracement, of course, is not good news for investors, but it's great news for traders, especially futures traders, because you can short this thing all the way down, and when it finds its footing, whether it's at the 50 or the 62 or the 38, wherever it comes in, you can switch hats like that and trade it to the long side. It's just one of the reasons we really like futures and focus so much on futures. The leverage is phenomenal. You can purchase one S&P 500 E-mini futures contract intraday for as little as $400 with some brokers. Our broker, it's about $700. But at the current price, you're controlling over $250,000 of best-of-breed equity. The S&P 500 consists of 500 large-cap companies. The index is always going to go higher over time. Now, you might say, how can you say that? Easy. That's how it was designed. You see, when one of those 500 large-cap companies gets sick, misses earnings, has other problems, fundamental problems, whatever, the board at Standard & Poor's can elect to remove that company from the index and replace it with a fresh, strong, bullish company that is exceeding their earnings expectations. So as long as you're constantly rotating the weak out and the strong in, guess what? It's always going to go higher over time. You can't trade the cash index, but you can trade futures, you can trade options. Options are way too complicated for me. I understand the concept. I just don't personally have an interest. Futures is so simple. You don't have to go home and do any homework every night. Back when I was trading stocks, and I would spend hours at night, studying earnings reports and just, what the chatter was in the chat rooms, and all that stuff. But when you're trading the index, Not only do you have this incredible leverage where for $700 you control $250,000 of best of breed equity, but your risk is spread over 500 companies. And even though you have to put up $700 with our broker, 400 with some, and trust me, you get what you pay for. Okay, so we have a full service broker who hangs out with us in the live training room in the morning and is always a phone call away for any of our members. Now, you've got that leverage, 700, puts you in control of $250,000 of best of breed equity. How do I come up with that figure? You take the current price. Hey Alexa, what's 5,166 times 50?
66 times 50 is
$258,300. That's what you're controlling with $700. Go to your stockbroker and say, hey, I got $700. What can I get? Well, I could, you could go to Robinhood and get a fraction of 1 share of Apple. So, I mean, there's no comparison. If you're going to trade, you want to be someone who trades for a living. If you don't understand futures, if you think futures are like options, you've always heard, I'm sure, 80% of options contracts expire worthless. That's true. That's a true fact. But that's not a true fact with futures. It's a whole different ballgame. So take some time to study, to learn. If you haven't taken our free trial, you can do so. Just go to mytradingiq.com, click the link at the top of the homepage, fill out that registration form properly so we get it, and we'll teach you everything you want to know and learn about the world of futures. Okay? All right. Bulls are still pumping. We're at 51.68 now. Could tonight's State of the Union be the catalyst? Oh, I got it right on the nose. That's pretty unusual. Could tonight's State of the Union be the catalyst that turns this market? Because it is going to turn, okay? Now, if it keeps climbing for another 2 weeks, don't be laughing, going, aha, he was wrong. No, I'm not wrong. I'm trying to help you understand how markets work, okay? To become a member of the family, go to mytradingiq.com. If you have any questions, call us at 949-42-EMINI. Send an email to support@cfrn.net. This is a fact, a statistical fact. 9 out of 10 new traders fail. Go bust, blow up, go home. Why? They bought the indicators, they bought the oscillators, they bought the algorithm, they hired a guru. What they didn't do was find someone willing to hands-on teach them how to do the job. And we do that for 2 hours and 10 minutes every trading day, from 9:20 a.m. Eastern to 11:30 a.m. Eastern, every trading day. It is an interactive trading environment, okay? Michael is putting on and taking off trades, explaining every move he makes, every trade he takes, and the reason why. Your job is to trade along in your demo account until you put together 10 consecutive days in a row so you can actually go live and start trading real money. People ask, how long will it take me to learn this? simple strategy you say you have? That depends on you. Trading is not a spectator sport. You can sit there and watch Michael trade for 10 years. It's not going to make you a trader. As Bert likes to say, you got to start pushing the buttons. This is why our 24/20 blueprint clearly states that you don't start out trading live because you haven't learned the strategy yet. You stay in your demo account until you put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Only then do you even think about going live. When you go live, you only go live with one contract. Now that first contract is funded with your startup capital, the money you funded your account with. Once you're trading live, real money, your goal is to increase your account balance by $2,000. Once you do that, the blueprint will give you the green light to add a second contract. Now, the big difference between the first and second contract is the first contract was funded with your startup capital, but the second contract is funded with profit you earned in the market. The blueprint will let you know when it's time to add number 3, number 4, number 5, number 10, all the way up to number 20. You only add one at a time when it's time, and you only add with profit you earned in the market. If you have the discipline to follow that, it will make it real difficult to blow up another account. If you start breaking the rules, you will blow up another account. The answer to trading is not in the markets. It's between your ears. And thank you, Mark Douglas, for that insight. By the way, if you are a member already, we have my friend Mark Douglas's tribute channel, chock full of articles, videos, classes that he taught. If you don't have, you were given access to that probably when you became a member, but if you don't have it, just reach out to Valerie and she'll hand you the key that will get you in. Price can only do one of three things: go up, go down, go sideways, right? That's the simplicity of trading. But then we come along, all of our big ideas, and we complicate it. And the more stuff we put on our screen, the harder it gets. Less is more. Let's wrap it up with our good word for the day. Everything you see here comes with a passport. Not only the live training room, the one-on-one private mentoring, you learn the strategy, you own the indicators, you get the logic alerts, the concierge trade alerts, and you get to come to the meeting tonight, 8 p.m. Eastern. Every Thursday night, members only workshop since 2008. We've missed a couple for holidays, and we may have had one or two other emergencies that prevented us from having our weekly workshop. But for the longest time, it was at 9 p.m. Eastern. Then I think about a year ago, maybe two, time flies, we switched it to 8 p.m. Eastern. So that, we could get it done and people could get a good night's sleep and be ready to go after it the next morning. Leon asks, if all the profit goes into the next contract, what do I take home to survive with? Okay, let me paint you a picture here, Leon. You're qualified to go live with one contract. You increase your account balance by $2,000. To add a second contract during the day session with our broker will cost you $700. So after about the third contract, start cutting yourself a paycheck each week. It's all in the 24/20 blueprint. If you become a member, then you'll have a copy of the 24/20 blueprint. And it explains to you exactly how you do that. Now, remember, when you spend $700, purchase or sell one ES E-mini futures contract, you're not risking the entire $700 because you're using a hard stop, whether it's 2 points, 10 ticks, or market structure. Once you enter the trade, you'll either hit your target or you'll hit your stop loss. Whatever it is that you risk, that's subtracted, and then the remainder is put right back into your account. So you can start cutting yourself a paycheck, as early as you want. The longer you can go and let your account build without starting to take money out, the better. But once you're at 5 contracts, 2 points in the ES, that's $500 per day. If you take 2 points out of the ES, with one contract, it's $100. But as you work your way up the ladder, at 3 contracts, okay, 2 points in the ES is $300 a day. On a 5-day week, that's $1,500. If at that point you want to start paying yourself $750 a week, you can. You want to pay yourself $1,000, you can. Once you work your way up to 10 contracts, 2 points a day in the ES is worth $1,000 a day. That's $5,000 a week. You want to take a $2,500 a week paycheck and let the rest build, you'll have a pretty hefty account before long. So hopefully that answers your question. If you have any other questions, just type it in. I'll be happy to answer it for you. All right, good word for the day. You are a wonder. Psalm 139:14. I praise you because I am wonderfully made. Despite your aches and pains, you are a living, breathing, walking, talking wonder. The psalmist said, you created my inmost being. You knit me together in my mother's womb. I praise you because I am fearfully and wonderfully made. One author explains, most of us take our eyesight for granted. But even the simplest of processes is divinely complex. The retina, for example, conducts close to 10 billion, that's B as in billion, calculations every second. And that's before an image even travels through the optic nerve to the visual cortex. The human nose can detect 1/millionth of 1 milligram of garlic floating in the air and distinguish among 10,000 distinct odors. The hairs blanketing your body magnify the sensation of touch so that you can discern 1/1000th of an ounce of pressure on the tip of a 1/2-inch hair. Pretty amazing. Trillions of chemical reactions are taking place in every cell of your body every second. You're inhaling oxygen, metabolizing energy, digesting food, maintaining equilibrium, purifying toxins, producing hormones, exhaling carbon dioxide, repairing tissues, and circulating blood. As you read, whether it's the newspaper or the Bible, millions of electrical impulses are firing across billions of synaptic pathways. And here's the kicker. You don't even have to think about it. But you should. And you should praise God for the gift of life and the multitude of His blessings that you enjoy. And you should do one more all-important thing. Discover your life's purpose and dedicate yourself to fulfilling it. It has been said, the two most important days in a person's life are the day they're born and the day they discover why they were born. Think about it. I hope you find your answer. You're very welcome, Leon. All right, guys. State of the Union tonight. This is going to be very, very interesting. I do believe there will be volatility in the markets. Of course, margins are higher at night, so you can always trade the micros. Could we see a really big move? I don't know. It depends on how things go. And how the world takes it in. So we'll talk about it tomorrow. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy, with His grace, and I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.